Hey guys, in today's video I'll be teaching you how to find and use dynamic support and resistance when trading, as well as showing you a checklist that you can run through when you're looking at any chart. So without further ado guys, let's get into today's video. Before we dive headfirst into talking about dynamic support and resistance, let's first take a moment to consider what normal SR is. A level is resistance if price has rejected that level previously and is now underneath said level. The level is defined as support if price has rejected this level previously and is now above that level. Although this sounds like a mouthful, check out the diagram here for an example of resistance and a diagram here for an example of support. An easy way of remembering whether a level is support or resistance is that support acts like the floor and the resistance acts like a ceiling. An incredibly important point that we need to remember about these levels is that they are dynamic, which means that if a level is currently being respected as resistance, there is actually nothing stopping it from being broken and then retested as a level of support. And this, as a matter of fact, is what happens on a regular basis. It's really common after a level has been tested multiple times for price to push straight through the level, then test it as the inverse. And this is what we call dynamic support and resistance. Let's look at this in a little bit more detail and you'll probably understand it a bit more. Dynamic support and resistance levels are zones in your chart that price has reacted to in the past. The dynamic part comes from finding levels that are likely to be used as both support and resistance. This is a really important concept, so let's jump on the chart and look at this a bit further. The reason why dynamic support and resistance is so important is because you always want to be following the trend when we're trading. If we're currently in an uptrend, at some point resistance is going to have to break if the uptrend is to continue. Once prices finally break the resistance, if price is going to remain in the uptrend, it needs to form a higher high and a higher low. One of the highest probability positions that this will occur is at an inverse level caused by dynamic support and resistance. There is one reason that we need to be confident when plotting our levels, and that is because these levels represent areas where price has been vertically restrained previously, and price is likely to falter again around these areas in the future. There are certain criteria that you can look for in dynamic SR that increase the likelihood of our levels being strong and therefore more likely to hold. To make sure that you're always spotting good levels in the market and not rubbish ones that will actually be useful to trade from, we produce a checklist that will be used to rank your levels when you're marking your charts up. The first factor is looking for obvious levels in the market. You need to remember that there are no brownie points for finding obscure levels in the market, and you need to be focused on the levels that a lot of market participants are also identifying, so that there are a large number of market orders placed at these levels. A large number of orders will usually give you a greater reaction at this level. Ways of spotting obvious levels are either by using great respect to psychological levels, or using clear, well-defined SR visible in a lot of time frames. The second factor is looking for swing points in the market. These swing points are extremely useful as they show the points of previous moves where momentum has finally exhausted. You may want to mark the extreme swing points in your chart, as well as which would be the highest and lowest point of your chart as well. If you plan on doing this, then make sure you're using common sense and not using highs from tens of years ago, which are unlikely to be relevant in today's fundamentals. The third factor is looking for multiple rejections of the area. This means that we would like to see the level being tested a few times so that we know that it's a good level to trade around. However, this doesn't mean go short if you identify a level of resistance that's been tested 20 times, as there's likely a reason behind why price is persistent at this level, and often that will result in breaking through the level in the near future. It means that we want to see a level that has been respected multiple times, and we don't want the market quickly trading through the level and then falling back again to this level. Before we keep going, here's a top tip for dynamic support and resistance. To prevent yourself from being caught on the wrong side of position, you can always mark these levels and then use TradingView alerts to monitor price action at these points to ensure that you can sit on the sidelines until you've seen a high probability setup that you actually want to enter a trade from. The fourth factor is looking for levels that have been tested as both support and resistance. This lets us know that the level is consolidated in the market, and a great way of seeing this is to look to the left for previous levels of structure that could have been tested as the inverse, causing price to reverse. An example of this is if you were looking to go long in a position that you saw that 40 pips high from your entry, there was a previous level of support that you think could be tested at a level of resistance. You may think twice about setting your target above that level. The final factor is looking for levels that have resulted in price moving away with good momentum. This means that the level has been respected properly, and there are likely a lot of orders that will trade at this level, suggesting it's an area that a lot of traders watch. So guys, now you know how to find good levels in the market, why not get yourself over to TradingView and practice plotting your levels. Feel free to send some annotated examples through the FX Education Instagram at FX Education Official, and myself or one of the guys will be able to make sure that you're keeping yourself on the right track. Before you go though, if you're still here this far and you aren't subscribed, then do us a favour and hit that subscribe button. It doesn't cost you anything and it really helps us out. With all that being said, make sure you tune in for the next video where we'll be introducing trading indicators into the 365 Days of Forex series. Cheers guys, and I will see you in the next one.